Russia-Ukraine saga sets the tone for global markets. Asian equities were mostly lower at the start of the week as risk sentiment stayed downbeat at the start of a new trading week amid persisting concern about a possible Russian invasion of Ukraine, despite the Kremlin denying any intention to invade its neighbor. The Nikkei 225 in Tokyo fell 2.23%, while the MSCI's broadest index of Asia-Pacific shares outside Japan gave up nearly 1.5%. Wall Street stocks came off session lows but finished mostly lower on Monday, with financial and healthcare companies leading losses. Investors stay nervous amid the heightened geopolitical tensions. On this front, Washington moved to close its embassy in Ukraine. Adding to a cautious tone, market players continue to digest fresh hawkish signals from the Federal Reserve after President James Bullard said that the central bank needed to fight inflation more aggressively. The next day, risk sentiment improved during the European hours amid reports that Russian troops were returning to their bases. As risk trades jumped, the Pan-European Stock 600 index climbed more than 1%. Similarly, U.S. equities advanced on Tuesday, snapping a three-day losing streak as news from Russia helped ease some worries about the geopolitical conflict. Also, investors continue to assess rising inflationary pressures in the United States in the context of the Fed tightening. Of note, fresh data showed that U.S. producer prices rose 9.7% on a 12-month basis. Asian equities are mostly higher on Wednesday as fears of a Russian invasion of Ukraine this week dissipated. The MSCI's broadest index of Asia-Pacific shares outside Japan surged 0.9%, while Shanghai Composite added more than 0.5%. Despite the data showing China's factory gate and consumer price inflation both came in lower than expected in January. In Europe, stocks trimmed losses in a day of choppy trading to finish slightly lower on Wednesday amid resurgent worries about geopolitical tensions after NATO and the United States said that they had yet to see any evidence of a de-escalation that could avert war. Adding to a more downbeat tone, Kiev blamed Russia for a series of cyber attacks. As such, the UK's FTSE 100 ended 0.07% down, Germany's DAX declined 0.28%, and France's CAC 40 shed 0.21%. After a volatile session, Wall Street indexes closed flat on Wednesday to trim intraday losses following the release of the minutes from the Fed's latest meeting. The minutes affirmed that the central bank is ready to raise interest rates soon, but did not indicate the Fed would move faster than already expected. On the data front, retail sales surged 3.8% in January versus a rise of 2.1% expected after a 1.9% decline in the previous month. As such, the S&P 500 inched up less than 0.1%, the Dow Jones Industrial Average closed 0.2% lower, and the Nasdaq Composite ticked down 0.1%. Meanwhile, the dollar extended losses nearly across the market despite stronger than expected retail sales data and mixed retail trends. The USD index failed to regain the 96.00 figure and finished around intraday lows in the 95.70 area. On Thursday, however, risk sentiment deteriorated to push the safe haven dollar back into positive territory. The index is now back around 96.00, adding 0.25% ahead of the European session. Elsewhere, gold prices stay volatile as Russia-Ukraine conflict continues to set the tone for markets. Following some rejection from the mid-2021 highs around $1,880, the precious metal market regained the upside momentum that has brought prices back to the upper end of the extended trading range early on Thursday. It looks like the bullion could target the $1,900 barrier next if geopolitical tensions continue to drive safe haven assets north. Asian stock markets were mostly higher on Thursday against signs that the Federal Reserve won't be as aggressive as feared in tightening policy. The MSCI's broadest index of Asia-Pacific shares gained 0.27%, while the Nikkei 225 in Japan fell 0.83%. Investor sentiment remained unstable after Western countries warned that Russia's military presence on Ukraine's borders was growing rather than shrinking. That is all for today. Thank you for watching. Please click subscribe to always be in touch with the latest market news.